Will the Bank of England follow in the footsteps of the Fed and ECB and deliver 25 basis point hike at their meeting, or will they go for 50 again? Hello and welcome back to our channel. My name is Daniela Hathorn. In today's video, we are going to be previewing the Bank of England meeting, which is happening this Thursday. And as I said, markets are a little split right now as to what's going to happen. They're definitely expecting a hike, no doubt about that. But there's currently a 65% chance assigned to 25 basis points and the remainder assigned to 50. So in this video today, we're going to be looking at the case for both of these scenarios and of course look at the charts of the pound. But before we get into it, please like this video, comment, subscribe and turn on your notifications. So as I was saying, markets are split, not evenly, but they are split as to how the Bank of England meeting can or may evolve on Thursday this week. Now remember, at their meeting in June, we did see a surprise 50 basis point hike, and that was actually after inflation data in May surprised to the upside, remaining very elevated and giving the Bank of England no other choice but to hike aggressively at that meeting. In terms of the expectations for this meeting, we are seeing a majority of the market expectations assigned to 25 basis points, and that is basically as markets view that a lot of the pressure has been taken off the Bank of England, given that the inflation data in June has actually nicely dropped more than anticipated, and showing that even services inflation, which has been one of the most sticky parameters in the last few months, has started to drop as well and has dropped more than expected. So that is supporting the view that the Bank of England may go back to a more conservative hike like they have been doing prior to the meeting in June, but also knowing that the Bank of England has been pretty reluctant to be extremely hawkish in the past. It feels like that just seems to be that's going to be their base case scenario at this meeting, given that they do have the chance and the opportunity in the data to actually take this slower step in the hiking cycle. On the contrary to that, we have seen some upside to pay growth. We know that wages have been a key sticking point of domestic inflation recently, and with so much industrial action going on in the country and the cost of living crisis, it's only normal that we expect wages to continue to put upward pressure on inflation. That has been offset, I need to mention, by the fact that we have seen a cooling in the jobs market, but nonetheless there is still those areas of the economy that remain very hot, and no doubt the Bank of England is going to continue having their eye on that. That may give ammunition for those people that believe that the Bank of England should go for a 50 basis point hike. Also, because it is expected that the Bank of England will hike again in September. So if you're going to do a 25 basis point hike in August and one in September, maybe they are of the view that you might as well do 50 now, and therefore just take stricter action sooner rather than later. So that is also one of the views as to why 50 basis points could be delivered at this meeting. As I said, 25 for me seems more likely at this point, but it's pretty valid to also anticipate 50. I don't think it's easy to discard that view at all. I think it's definitely something to keep an eye out for, and of course markets implied pricing showing that that is the case. Now, in terms of the terminal rates, markets are now predicting the terminal rate at around 5.8%. That would imply 3 more 25 basis point hikes from where we are now. The current rate is 5%. So if we were to see 25 on Thursday, we could see 25 in September, and then I believe the next meeting would be in November, or we could see 50 and then another 25 either in September or November if they wish to pause in between. So there are a few options as to how to achieve the terminal rate, but it seems pretty realistic given where we are now, and given that despite inflation having fallen, it still remains at around 7.9%, the year-on-year headline inflation. So of course, still very high and very off that 2% target from the Bank of England. compared to, for example, the US, which is now at 3%. The Eurozone inflation has risen slightly, but we've seen it at 5.5%. The UK inflation remains still very much off track compared to other countries, and I think that's where the Bank of England is going to really have to remain on this hiking cycle. In terms of the vote split, do remember that so far this year we have seen a 7-2 vote split at all the meetings. Tenreiro and Dhingra have been the two dissidents, the dovish dissidents throughout the period. Tenreiro is now left and she has been replaced by Green. And Green is thought to be less dovish or more hawkish than Tenreiro in itself. But also considering this is her first meeting, she's likely to just go with the majority. So we could expect to see an 8-1 split for a 25 basis point hike, with Dhingra still being the dovish dissident, or we could see a three-way vote split, seeing, for example, Dhingra going for no change, a few of them going for 25, and then the most hawkish, for example, Catherine Mann, going for 50. So we may see that three-way vote split at this meeting, given that we did see 50 at the previous one, and given that inflation is still very, very sticky. So of course, a lot of emphasis and focus on that. I think something else that's going to be very looked out for is forward guidance on interest rates. Now, the Bank of England has been very reluctant to talk about the future path of interest rates. I think especially their forecasting, for example, with inflation has undershot throughout most of the last year or so. So I think they do stay away from predicting it too much, and they're likely just going to reiterate that if persistent inflation signs remain or emerge, that further action will be taken. So I don't think forward guidance is going to provide too much information for markets, but of course it's going to be interesting to see what Governor Bailey has to say about inflation, also what the meeting notes will have to say about the decision and why it's being taken. Also, quantitative tightening. We have seen the Bank of England recently talk about increasing the amount of holdings that they are letting go of or shedding, either because they're selling or because they're simply rolling off the balance sheet. So of course we could see some further guidance on that, although that is expected that we'll see further in the end of the third quarter, so towards September time. But of course something to look out for. But all in all, just as a recap, 25 is the majority of the expectations at the moment, but there is still some way to sign to 50. Given the way inflation has been moving and the way the Bank of England has been performing as of late, it looks like they could go for 25 at this meeting, despite seeing 50 at the previous one. But of course, with wage pressures still very much elevated, and inflation, although falling, still doing it very stubbornly, and definitely not in a clear downward trend, we could see the Bank of England actually be a little bit more forceful at this meeting, therefore allowing themselves a little bit more wiggle room further on. So let's jump onto the chart now to see how the pound has been performing. So here we have it, the pound US dollar cable chart, Capital.com by TradingView. And as you can see here on the chart, on Thursday last week, we did see the pair pull back significantly, most of that on the back of the US dollar picking up some strong momentum as US yields shot up, the 10-year yield up to just below 4% on the back of the Bank of Japan surprisingly tweaking their yield curve control policy, allowing it to rise further. So that weighing on cable, seeing that pullback, actually breaking below a trend line that was connecting the lows since the end of May here. It had held support quite nicely for the last 3 months, breaking just below it on Thursday here. Then on Friday, recovering some strong momentum, pulling back towards the end of the session. They're about halfway, and so far to the start of this week, trying to find some support once again along that rising trend line. So it doesn't seem yet to have been fully invalidated, even though we closed below it on Thursday. We saw that quick reversal on Friday, closing once above it above it once again, and that has brought it back into action. Looking at Friday's candlestick, you can see we found some strong resistance there along the 20-day simple moving average, which is also the midline of this Bollinger Band pattern here that I have. So of course that denoting that despite the path of least resistance still looking to be higher in the short term, there does seem to be a fair amount of resistance. And of course, something to keep an eye out is the 130 mark straight up ahead. That was where we saw that sell-off initiate on Thursday, as you can see, just around that 130. It's a very strong psychological level. We did break above it back here in mid-July as the US CPI and PPI data came in below expectations, which meant that the US dollar was heavily sold off. We saw cable taking advantage of that and actually breaking above those Bollinger Bands, showing the amount of volatility in the market. That has come down slightly, but still volatility remains pretty wide. So we could see the pair trending along this midline a little longer as it tries to find a direction. Of course, with Thursday's Bank of England meeting, that could be a catalyst for the pair. And looking at the RSI as well, now right in the middle there of that 50 line, indicating that the market is pretty much a little bit lost at the moment, struggling to find direction, and it could go either way. I think with the meeting in itself, if we get 25 basis points and the Bank of England just saying that it's going to be data dependent from here on out and going to monitor the market, I think we may see some weakness in the pound. I think that's going to be, at least in the market's view, a little bit of under delivering, and the Bank of England be complacent once again with inflation. So I think we could see cable selling off a little bit, but I think that will be more obvious, for example, with euro sterling. I think that's where euro will take advantage, of course, on that rate differentials and the differential in views of the central bank. I think with the Fed, for example, they do remain hawkish, but we know that terminal rate is coming soon. Powell has already suggested that, inflation has come down nicely, and of course they can't be lenient and they can't take their eyes off the prize really, but they are probably more likely to start looking at stopping that hiking cycle compared to the Bank of England. So we may see pound taking a little bit more advantage there compared to the Fed, but especially with euro sterling, I think the ECB still has further to go, and I think that's where we'll see a lot of the weakness if we do see this perception of under delivering at the meeting priced in. If we do see 25 but a strong hawkish message from Governor Bailey or the Bank of England, I think we may see a little bit of a rebound in pound, potentially trying to break above this key area of resistance, heading towards the 130 area. But again, finding a little bit of resistance along that area. I think if we do get 50, that shows that the Bank of England is committed to fighting inflation and to bringing it back to its key level. I think that's where we see cable excel, and I think we see it push above 130 in the short term, really trying to push towards those highs that we saw back here in mid-July. So that is, in my view, some of the likely scenarios that we can get from the Bank of England. I think anything that's viewed as being too lenient could weigh on the pound, whereas a strong response and commitment to fighting inflation, I think, is going to be the key for cable to continue pushing higher after the meeting. That is it for today's preview on the Bank of England meeting this Thursday. Thank you so much for watching, and don't forget to subscribe to our channel.